Amazon reports tomorrow. How about that?
Actually, bring up the put call data on my other screen to see what it's done last couple of weeks.
All right, so here's Amazon. As you could see, what Fari said is very true. He says that they're reporting tomorrow. What are you noticing here, everybody? Look at the vols in the October weeklies. There's 2 days left. Look at these vols. That's volatility. Okay? The at-the-money straddle with 2 days left is 1185, 12, 10. So that's saying on the upside, we're talking $172, and the downside, $148 as the range that the market is implying with that straddle of where this stock possibly can go. That's pretty amazing. That's what, 7% move, 8% move, 8% move that they're expecting after the earnings announcements. So look at the October weeklies; they're just in the stratosphere. So let's take a peek at the Novembers. Now you can see the Novembers are probably what's happening here? How come I don't have? You look at the Novembers. They're sitting in the ranges of 45, 48, and look at the volumes, 4,000, 4,000. Those are the open interest, but your volumes are 1,000, 2,000, some big volumes. And the historical volatility, if I had to ask probably what the historical volatility was in Amazon, it's probably going to be, my guess is in the high 20s. Yeah, which is reflecting what's going on right now. Yeah, right. So 30s is probably very appropriate because now you're seeing them in the high 40s. So after tomorrow, you're going to see the evaporation of these big high vols in October weeklies, and then you're going to see the NOVs come down back to the %30 range. So, I mean, what do you think here, Fari? How does this stock look? What direction, if any, do you think it's going? All right, Fari, fire away.
Okay, got you on mute for a sec. Hope you guys can hear me okay. All right, let me get my screen here. The reason I'm going through this, you guys know, because I may be putting a trade up tomorrow in HFT. So with Admiral here, might as well take advantage of that, work it through here in person rather than over the phone, middle of the day with all the craziness that goes on in the chat room. Admiral, I'm bullish on Amazon. The PayPal numbers today contribute quite a bit to eBay. Online commerce is heavy. I know I use Amazon constantly for even the small stuff. I know my nieces, they keep on buying this stuff, and you know, the books and all that, downloads and all that, Kindles. Yeah, I would go here and say I want to buy 165 calls for November. Don't want to do the ARC it's too short, way too short. Yeah, I'm not sure what. Let me look at the. Let me see what kind of volume we have on ARC 22s. Let me see that. I just brought up a Trade Monster up. For 165s, open interest is 1,600. Today traded 1,100. Do you see? Can you believe that? Oh my God! I guess, well, near expiration. So much is going away. The vol is, my God. The vol is 117. Yes, I'm saying in the ARCs. It's 117, twice of the Univol is. No, thank you. Going to NOVs. Let's see. All right, this is 165, but look at it. It's a 575. Wow. The vols are 41. I'm sorry, delta is 41. Vol is 46. That's below the Univol. We got volume all right. Open interest is 4,000. Trade 1,100. But it's 575, Admiral. That's cheap. I mean, that's rich for my blood.
Yeah,
That's rich for my blood.
You need 170.75.
I can't see going there. The 3-week Sigma is 185. It won't be easy for this stock to go to 3 Sigma. I mean, Amazon is no Google.
So can you possibly see it as?
I mean, it's managed by another great Princetonian, but it's no Google. Trust me.
I mean, you think you could see it going possibly to 170?
We don't have a. Well, hold on 1 second. We really don't have a marker, if you will, beyond 167, because that's the 3 Sigma daily. And it's interesting enough when you go to 3 Sigma weekly, it goes to about the same level, and then next level up is 185, which is 3 Sigma weekly. See, 2 Sigma is around 168 or so weekly. 165 is 3 Sigma daily, and then 3 Sigma weekly. That is. I mean, Jeff Bezos has to come in and really deliver. I'm not sure that would happen. Keep in mind also, the stock has really moved up. The stock was trading $100, okay, in July. It's up 60% since July. It's not. I mean, this stock has really gone up. So.
Well, I think an example was, we put on a butterfly and apple during the week here. That I think we spend like $1.10, and everything went wrong, and it still held its ground at about 75 cents. 55 today, but that's with something that should evaporate a lot faster, and the stock has moved down on a weekly that we did. Based upon what you're saying, I love butterflies in the scenarios that you just described. The 165, 70, 75 butterfly. 165, 170, 175 butterfly in November. I mean, you look at that, the offer to bid, buying the offer on both the calls is going to cost you $8.67, and $0.57. These are November's.
This 40 cents is the mark, which is halfway point. Bid is 23 cents. Ask is 50 cents.
Right. So I took buying the offers and selling the bids for about 57 cents. Worst case scenario. So when you look at that, that means that the stock has got to be between 165.57 and 174.43 for you to make money. You start to make money in there. Anything that's more to the middle of those two prices is a grand slam. So why wouldn't you want to risk? I mean, I would love to risk 57 cents to watch this thing as time goes by and it climbs up, go to $1.50, $2, $3, $4, gigantic return on a minimal risk. It's a great tool for prognosticating a move in a direction that's very risk averse with big upside opportunity. Right, that's what it is. Right, because we're so out of the money. But in this scenario, here's where we have an advantage. Okay, the computer can't see your prognostication or hear your directional call based upon your analytics. It's not doing that. It's been giving a pure probability based upon its price now to historical relationships. Yes, based on historical relationships. So what we're using is we're trying to throw in the flavor of where we think it's going to the strategy, which is going to move the probability to our advantage. And risk reward is gigantic. I mean, I love butterflies for a half a buck or right around there. You know, obviously a 5-point butterfly, which is the difference of the strikes, the maximum return is it gets to $5. So 5 from the 57, we could pick up 4.43 on each one lot. You know, so our 10 lot you could pick up $4,400. Not a bad trade if it gets near the 170 range. Yes, that's right, Mayor. Mary Shaw asked, are you talking about long the butterfly in November AMZN? That's correct. The Nove 165, 70, 75 butterfly. We're buying one Nove 65 call. We're selling 2 Nove 70 calls, buying 1 Nove 175 call. And if you break that apart, what do you have? You're long the Nove 165, 70 vertical, and you're short the Nove 170, 75 vertical. So obviously a move up to a certain degree is going to benefit you. And obviously closing at the point or strike that you're short both is where you get your maximum gain, which is the 170 strike.